Famed commodities investor Jim Rogers, he's sounding the inflation alarm. With inflation creeping up across the globe, turmoil spreading across the Mideast, oil spiking over $100 a barrel, and consumers paying a steep price at the pump, Jim Rogers here to weigh in and help you, the Kudlow viewer, turn some of this pain into profitable gain. Joining us now from Singapore via Skype is the aforementioned Jimmy Rogers, chairman of Rogers Holdings Company, old friend. Jimmy Rogers, Ben Bernanke, the all-seeing, all-powerful, omniscient Fed chairman, says there is no inflation problem and there's just a temporary bump up in oil and commodities. Are you saying that the Bernanke is wrong?
Of course, Larry. He has never been right about anything. I don't know why you pay any attention to him anymore, except as a contrary indicator. Go back and look at his record over the past 7 years in Washington. He has never, ever been right about anything, and he's dead wrong this time.
So another factor here that Mr. Bernanke never talks about is the dollar, which is sinking out of sight, as we discussed in the last segment. Now, I want to know, if the dollar is falling in your world, what does that mean for your investment strategy?
Well, I own commodities because commodities are the best place to be. Commodities are up 1,000 times better than stocks over the past decade. They continue to do well. And, Larry, they continue to be the best place to put your money, either that or foreign currencies.
All right, but, Jimmy, I hear you. I know you're going to say that. But let me ask you, worst case scenario, the Saudi Arabian Days of Rage, that's next week is going to happen, actually a week from tonight. If that runs out of control and oil prices spike up, I don't know, another $100, I'm not smart enough to know, wouldn't that damage the commodity play because of the implications for a sinking world economy? I mean, it's sort of a reverse spin risk.
Well, first of all, if you own oil and it goes up $100, you've profited mightily. But, Larry, they will then print more money. All Bernanke knows to do is to print money. It's the wrong thing to do, but the dollar will continue to go down, and you have to protect yourself. You protect yourself with silver or rice or natural gas or something. You've got to own real assets.
And out in your part of the world, China deliberately seeming to engineer lower economic growth. They're trying to fight inflation. They're raising interest rates and reserve requirements, Jimmy. Might that not depress your commodity play?
Well, of course it will, Larry. But remember, supply is going down, too. That will suppress demand, but supply of everything is going down. We're running out of agricultural products. The world is running out of known reserves of oil. Supply is going down, too. Now, of course, there'll be corrections along the way. There always are. But still, commodities are the best place to be. And, Larry, under your scenario, if things get worse, you're not going to make any money in stocks. Your only hope is commodities or foreign currencies.
Talk to me some more about stocks and what your position is right now, and in particular, NASDAQ-type technology stocks.
I'm short NASDAQ-type technology stocks through an ETF, and I'm short emerging markets. Those are the two areas of the world stock market which have been overexploited in the last 2 or 3 years. I've got to have a hedge, and so I'm short emerging markets and NASDAQ.
Tell me some more about shorting tech, because tech has been a favorite here in the States. I get it from all the investors who come on CNBC. Why are you so down on tech?
Because it's been overexploited. You just got through saying it. It's music to my ears. Everybody who comes on CNBC is touting tech. That means it's overexploited. That means everybody owns it. That means it's a place to be short if you need a hedge.
What about the big indexes, the S&P 500? Let's take the broad index. Are you shorting those stocks also?
No. I don't own any of those stocks. But no, I think the better place is the NASDAQ and the emerging markets, because they're the ones that everybody is wildly optimistic about.
And what is your favorite currency play? I guess it's not the dollar. What's your favorite currency?
The renminbi, the Chinese currency, is my favorite right now. Now, Larry, it's not that easy to buy. Although you can. You know, the Bank of China opened up a branch in New York so that Americans can own renminbi now. There are renminbi ETFs. I would say the renminbi is my very favorite.
Jimmy, is the dollar destined to lose its primary power of the world's reserve currency? Big story in the Wall Street Journal this week about that topic. What's your take? Is the dollar just going to continue to sink?
I'm glad they finally figured it out, Larry. It is sinking. More and more people are moving away from the U.S. dollar. Even some of our allies, like South Korea, some of the other countries, are moving away. They see what's going on with the dollar. You should learn about all your viewers should learn about foreign currencies because, unfortunately, in Washington, they've abandoned the dollar, and they're trying to debase it, and make it go down.
All right, we will leave it there. The great Jim Rogers, my old pal, very clearly put. Thank you, Jimmy. Terrific stuff. All best of luck.